I actually think that people feel like the revision to slightly lower growth rate in China was actually taken very much in stride by markets around the world. I mean, I think if that kind of news had come out, 5 or 6 months ago, I think it would have had a much bigger impact. And I think actually in China as well, I think again there's a consistency and I think a confidence around being able to continue to manage the economy for growth. And I have to say, to me it's been very impressive because obviously I've visited a number of times over the past 3 or 4 years, and even in the deepest parts of the crisis, I think clearly in China there was a confidence about the growth in the economy and the ability to manage that, and it's actually, obviously, it's proven to be, it's proven to have grown quite consistently over that period. So a lot of credibility in that.
What about the Chinese banking system? There's a lot of people talking about bad debt on the books, credit crunch. How healthy do you think China's banks are?
Well, I think the fact that people have concerns is not surprising given everything we've been through in the last 3 or 4 years and all of the, some fairly surprising things that have happened that wouldn't have been predicted. I actually continue to believe that the Chinese banks are very well managed. We were actually quite involved in the going public process for a number of the big banks, and as you know, one of the things they each did was to create strategic partnerships with international banks, and I actually think there's been a lot of sharing of best practices in terms of, particularly on the credit side, et cetera. So I actually think that they continue to make a lot of progress towards becoming in fact very well managed banks. So I continue to believe that they'll actually be, I think they'll be be able to weather, these issues. Now, it doesn't mean there won't be issues, but I think they'll be manageable issues.
Let's talk about Europe now and the sovereign debt crisis. We know Greece, of course, got their second bailout package. Where do you think this is heading?
Well, I think we've had a pretty consistent view on it for the last couple of years, which is there are serious structural issues that have to be worked through. Those will take some time to work through. I mean, there's no magic wand solution that's going to overnight solve everything. We do think that the countries in the EU overall are taking the right kind of constructive approach to improving the situation over time. But again, it will take time. The governments and the various different regulatory bodies, central banks, will do what's necessary to avoid a catastrophic outcome in Europe. And so that's been our belief, and it's obviously played true to that so far. But obviously there will continue to be issues and there'll continue to be noise and also real issues that come out of that. But I do still believe that in general things will improve. They'll be on an improving trend, but there will be volatility within that.
What about the U.S.? You're from the Midwest. How do you think the U.S. economy is doing? I think you had Austin Goolsbee at your Asia Investment Conference. He's skeptical on the recovery. Do you see it that way?
Well, I think the U.S. has obviously been very resilient. I think the growth there has been sort of an upside surprise over the past few months. I think it's going to continue to grow, and I think we're going to continue to see progress in the recovery there. Do I think the markets are perhaps a little bit overly exuberant right now? Maybe they are, but I do think that we're going to continue to see growth in the U.S. and it's probably going to surprise on the upside. Our view is that we will meet our risk-weighted asset requirements. We'll meet all of our capital ratio requirements. We think we'll be able to actually drive a business which meets our target return on equity, which is above 15%. And we think all that taken together, we'll actually do that probably in advance of other competitors in the market. And we think that that'll be a best-in-class business model. I mean, if we can make 15% plus returns on equity, we think that'll be a best-in-class business model.